Hello, everyone. First of all, let me introduce myself. My name is Riesya Salsabila from Institute Technology Bandung in Indonesia, and today I'm going to be talking about my dissertation, which is titled How Does Financial Technology Innovation, such as online banking and digital wallets, impacted Indonesia's economy? Yep. Moving on. First, we have an overview of what I'm going to talk about, what I'm going to talk about. So first is abstract, introduction, research objective, literature review, methodology, findings and discussion, and finally conclusion. To begin with is the abstract. This exposition investigates the influence of financial technology on the Indonesian economy, focusing on the transformative role of fintech innovation. Indonesia's evolving digital landscape, characterized by a significant segment of unbanked and underbanked citizens, offer a fertile ground for the deployment of fintech solutions. The objective of this research is to assess how fintech has promoted financial inclusion and spurred economic growth, while also identifying the inherent risks and obstacles. The expansion of Indonesia's financial sector is propelled by extensive mobile connectivity and governmental efforts towards financial inclusivity. Findings indicate that the fintech advancements have substantially boosted financial literacy and inclusions, with services like digital wallets and online banking offering essential financial resources to those previously excluded. So, to begin with, is the introduction. Indonesia is Southeast Asia's largest economy and is home to 260 million people and ranks 10th globally by purchasing power parity. Since the 1997 Asian financial crisis, the country has achieved substantial economic growth with a 20-year development plan aimed at improving human capital and competitiveness. However, despite its economic strength, 80% of the population still remains unbanked or underbanked. However, smartphone penetration is high at 80%, driving the rise of financial technology. And it is highlighted that digitalization could create a 150 billion economic impact by 2025. Moving on is the problem statement. Approximately 80% of Indonesia's population still remains unbanked or without access to traditional financial services, and is largely due to limited financial inclusion, which hampers with Indonesia's economic growth and perpetuates inequality and restricts entrepreneurial opportunities. Outdated infrastructure and practices further constrain the efficiency of financial transactions in an increasingly digital world. However, the extent of fintech's contribution to financial inclusion and economic efficiency in Indonesia still remains unclear due to limited empirical evidence. Moving on is the research objectives. This research aims to analyze the impact of fintech applications on Indonesia's economy, focusing on financial inclusion, economic growth, and business transformation. It examines fintech's growth and its contribution across various locations and demographics, including urban and rural areas, income levels, and age groups, and the study seeks to provide insight into these advancements and their role in Indonesia's economic development. So the research question is, what extent have fintech innovation positively contributed to Indonesia's economy? The first hypothesis being fintech innovation help bridges the gap to the unbanked population in Indonesia and increases financial inclusion, along with enhancing efficiency in the Indonesian economy. The second hypothesis being over-reliance on digital financial services could lead to systematic risks and vulnerabilities such as cybersecurity, data privacy issues, and scams. So here we have an overview of the literature review. The first one being, what is financial technology? Financial technology, or fintech, refers to the application of technology in financial services, such as mobile services, software, and applications. It also includes hardware such as internet-connected piggy banks and crypto exchanges. Fintech companies often operate online, bypassing physical stores, and the growth of fintech is evident with 64% of the global population using fintech services in 2021, which is a significant rise from 16% in 2015. So, what is fintech in banking? Fintech plays a major role in digital banking, enabling customers to access and manage their accounts through online platforms. The market is projected to grow at an annual rate of 11.6% by 2026, and largely driven by digital banking and e-commerce growth, especially in developing countries. What are the different types of fintech? There's P2P lending, e-wallets, cryptocurrencies. Um, and then moving on is the history of fintech. Fintech started in 1866. The era began with the creation of the Fed wire enabling electronic transfers, and then credit cards were introduced in the 1950s, which marked a significant shift in consumer finance. FinTech 2.0 started in 1967 with innovations of the ATM and SWIFT emerged. And then PayPal was also introduced in 1998, revolutionizing online payments. Moving on to FinTech 3.0, which is from 2008 until now. Following the 2008 financial crisis, mistrust in traditional banks fueled the growth of cryptocurrency and blockchain technologies. And fintech now encompasses a wide range of financial services with competition amongst banks intensifying. Last but not least is the evolution and innovation of fintech in Indonesia. So Indonesia's fintech sector has rapidly grown from 51 active players in 2011 to 334 in 2022. And this growth is driven by the digital penetration and government support helping bridge the financial gap for the underbanked population and MSMEs. So the methodology, the purpose of the research is to examine the impact of financial technology innovations, um, such as online banking, digital wallets, on Indonesia's economic growth. And the study aims to analyze the pattern of fintech adoption through various demographic groups. A hybrid research model is going to be used, combining both qualitative and quantitative approach for the data collection. And the data will be secondary data, and both for qualitative and quantitative data, secondary data would be used. Moving on, we have the findings and discussions. So, to begin with, financial literacy, inclusion, and financial technology in Indonesia. So, the rise in financial literacy and inclusion has significantly supported Indonesia's economic growth, particularly after the COVID-19 pandemic. The financial literacy index increased from 49.68% in 2022, while the financial inclusion index reached 85.10%, narrowing the gap between the two metrics. Further information, urban areas continue to outperform rural areas in both financial literacy and inclusion, though targeted financial education has significantly reduced the disparity. So, the growth of financial technology in Indonesia. Financial technology has emerged a critical driver of financial inclusion in Indonesia, benefiting the unbanked population by providing access to essential financial services such as digital payments, mutual funds, stock tradings, and innovations such as the Quick Response Code Indonesian Standard, also known as QRIS, have streamlined digital payments with transactions reaching 98.45 trillion in 2022. Fintech success, driven by strategic marketing and partnership with SMEs, is supported by the digital economy's expansion, with the sector contributing to 77 billion USD to the GDP in 2022. Last but not least is the cybersecurity and data privacy issues. Indonesia has made strides in establishing cybersecurity and data privacy frameworks to support its growing fintech sector. Key policies include the 2023 Personal Data Protection, also known as the PDP bill, modeled after the EU's GDPR, um, and Cominfo regulations requiring data localization and operator registrations. The Financial Services Authority, also known as OJK, has also implemented stringent IT governance and risk management standards for fintech firms. And then finally, we have the conclusions. So, to conclude, financial technology has played a pivotal role in Indonesia's economic growth and digital transformation, with nearly 300 fintech firms operating in 2022. These firms provide essential services like P2P lending, especially to SMEs, contributing significantly to financial inclusion and the national GDP. Despite strong regulatory measures such as the Personal Data Protection Bill, challenges like financial mismanagement, fraud, and cybersecurity concerns still persist. This research confirms that fintech has expanded access to underserved areas and boosted the economy. So that is for the first hypothesis. However, for the second hypothesis, it has still remained unproven as over-reliance on digital financial services does not directly result in the stated risk. So, for the recommendation to sustain fintech growth, Indonesia could strengthen its regulatory frameworks by refining rules and expanding regulatory sandboxes for innovation, while also harmonizing regulations regionally. Efforts to enhance financial inclusion should also focus on developing tailored products for underserved population and supporting MSMEs through microfinancing. Investment in emerging technologies such as blockchain and AI, along with public private partnerships, will foster innovation and technical adoption. And moreover, consumer protection should be prioritized by enforcing data privacy laws, promoting transparency, and building trust. Okay, that's it from me. Thank you so much for listening. And yeah, thank you.